Thank you, Mr. Murat, for conducting this session so remarkably well. And these technical hitches are always there. So from India, I send a warm welcome to all the participants who are listening to this session, and allow me to share my thoughts on how Indian steel market would shape in the coming few months or maybe a year. The poll that has just been received and it was shown on the screen shows that many people are very optimistic that this rising scenario that Indian steel industry is now observing in terms of demand as well as the prices will continue for a few months, if not the end of the next year. Now let us see that how the whole thing has started and where are we. And also my contents, the list is very high, and please do not get so much worried that I will continue to bother you with all these details. But definitely, just to give you an idea of what are the major factors that are behind the India becoming a major steel producer in the last 1 decade or so. Now, first is the economic performance, because as you know, steel is a material, steel is a metal, which the growth is very much interlinked with the total economic behavior of the country. And in any stage of development the country may be, either it is a low development, low income countries, or developing or emerging economies, and even in the advanced countries, the steel industry's role will always be very, very significant. First of all, let us see the GDP growth data, which is definitely declining since 2018-19. Last year, we had shown about 4.2%. And this year, the financial year, because our financial year starts from April and ends in March. So if you see the first quarter, that is April, May, June, India's GDP grew by, rather degrowth by 23.9%. It is the highest in the world, as IMF has also shown. And the major factor responsible for that is that we had undergone a prolonged lockdown due to the pandemic. And now, subsequently, the situation improved. And in the Q2, that is July, August, September, on which the GDP growth data has been just released, shows that Indian GDP has degrown by 7.5%. So from a negative 23.9% to negative 7.5% is definitely a cause of excitement for Indian steel industry. And we are hoping that in the Q3, because that is the major part, the month started from October, November, and December. This is for us, it is the third quarter. And these are the months where these are called the festive months in India. A lot of festivities are there, and as a result, the consumption spending, the consumer spending actually depends on the extent of festivity. Due to the pandemic, there are various restrictions on movements and other factors, in which case, the extent of festivity has definitely gone down. But still, the industry is looking for this temporary boost, and that has actually happened in terms of the more automobile, the passenger car sales, more sales of two-wheelers, more sales of tractors, which I will come in detail in my next presentations. The second chart will show the current account deficit of GDP. This is very much important indicator, which shows that how many months of imports that you can forbear. And if you see the chart, it is actually going down, but here also the negative growth has been minimized, and we have now the Q1, which is not shown in the graph, we have ended up a surplus, the current account surplus. For that, of course, we are not very much, hopeful in the sense that the major import of India, as all of you know, is the oil, crude oil, and which the price decline has really helped the Indian balance of payments to improve. And then there are other imports also have come down. So, and the government is very much, emphasizing on exports, particularly the exports of other items other than steel. And as a result, the CAD, the current account deficit, has come down significantly. The third chart in the slide is inflation. This is also another factor which is very much to be taken into account in terms of when the government loses its purse. And then the concern is that more investment, more consumption spending, the inflation should be within a range of 3 to 4%. That is our Central Bank of India, called the Reserve Bank of India, has put a target of between 3 to 4%. And this wholesale price index is well within that. And currently, the latest figure of October, this month, we had an inflation of about 1.48%, which is well within that amount. But the point is that Indian prices, particularly the food prices, has actually gone up significantly, with a lot of causing for worry for the poor income people and also in the middle class section. And I'll come to that later on. That is called the consumer price index. This is what the chart I'm showing you is the wholesale price index, and the consumer price index is what the consumers are, they are concerned with. The fourth one is the fiscal deficit, and that is the deficit which the government is much concerned to make it also within a limit, because otherwise the debt as a percentage of GDP goes up very high, and then the repayment is becoming an issue. In India, since the interest rate is quite high, much higher compared to the advanced countries and also including European countries, so the repayment of debt is becoming a problem. So the government wants to keep that factor also in mind, so that the fiscal deficit is well within the manageable limit. Continue with that. The first concern is the gross fixed capital formation as a percentage of GDP. You will find from this chart that there is a secular decline from 33% to 27%. And the recent data which has been released on Q2 of this year, this percentage has gone down further to 25%. So I feel that for steel industry to grow and to sustain the growth, it is very necessary that we maintain this gross asset investment as a percentage of GDP. The second area of concern is the manufacturing sector growth. As you will find that it has already gone on a negative territory, and hopefully this month it has come down to positive. And similarly, since manufacturing sector is about 77% of the total weightage of industrial production, so the IIP growth rate has also declined. And this time, the last month, it is only entered the positive territory. Hopefully, these two areas will be showing a good growth in the next few months' time. So the unshackling of economic activities by progressive unlocking, that is actually creating the economic growth, and as well as the industrial growth, which is consuming steel. And unemployment rate has already been dropped from 23.5% to 7%. The current account deficit is positive. Of course, it is not a very big consolation. The major area where economic reforms have paid a dividend is the agriculture sector. And agriculture, as you know, in India, the 70%, although it has got around 15% share in GDP, but around 65% population, they are in the rural areas, which is fueled by the agricultural sector growth. And because of the good monsoon for the last 2 years, agricultural production in India is showing a good growth, very good growth, in spite of the industrial growth coming down and the service sector growth very much hampered due to the pandemic. However, in the month of October, the manufacturing PMI at 58.9% shows that it is in the expansion zone. The consumer and business confidence index, as per the latest survey, is also showing a positive growth. The economic risk, I have already said about inflation, the global economy suffering from the second wave of COVID. In fact, this is one area where we'll have to be very, very cautious and keep our antennas strong whether the second wave of COVID is once again attacking various countries and in what form, in what seriousness. Spillover risk from global trade conflict and rising geopolitical tensions, and the limited fiscal space. That is the major concern in India. So this chart actually, Mr. Fujisawa has already covered. I'll not go into much detail, but only one point I want to show. In 2020, this is the IMA projection. Every country has gone into the negative zone, and India is the highest. But then 2021, there is a positive growth for every country, and for India, it is the highest growth. So people are already talking of V-shaped growth in India from next year. Of course, we are keeping our fingers crossed because there are so many ifs and buts. Now, this is the global positioning of Indian steel. India is in the crude steel production. It is as well as the finished steel consumption. It is about 102 million tons a year. And this year, we will be able to consume around 85 million tons of steel. That is my estimate. Of course, SRO gives a separate figure. This is the January to October figure, which shows that India is now in the third position behind China and Japan. But hopefully, India's steel production at the rate at which it is going up, this will be made up. However, one area where there is a lot of discussion of how to enhance the per capita consumption, which is a major indicator of the steel industry's growth in a country. India is really lagging behind all the countries, be it China, Japan, USA, South Korea, Russia, and the world. Even the world average is 3 times more than India. This is an area where that means one thing is very clear that I can share with the audience here, that in India, what I have found, and we have also found that since rural area is a contains the much bigger chunk of our population, and the urban area where the growth and the urbanization growth is also picking up. As a result, the steel industry's growth is somewhat, limited or confined to the urban areas. And so this is a very good potential for India to grow its rural consumption. I'll come to that in a somewhat more detail later on. In the DRI production, the direct reduced iron, India is already in the top, surpassing Iran and Russia. And it will continue to be so because in India, the DRI, which we call it as the sponge iron, which has come as a major substitute for scrap. There are already about 350 to 400, small and medium producers are there. They are producing sponge iron based on gas and sponge iron based on coal. Of course, the coal-based sponge iron is much more than gas-based sponge iron because of the limited availability of the gas. This is the Indian scenario. We have a crude steel capacity of 142 million ton. And if you see the capacity utilization, it is about between 77 to 78%. The last column shows that what is our April-October performance. We have produced about 52.8 million ton. And imports, this is the total imports, including the semi-finished steel. It is 2.5 million this year. Last year, it was 7.2 million. Exports last year was 11.2, but this year already the exports are higher at 11.9. And this is simple reason is that if you see the first initial 3 months of the COVID-19 pandemic, which has really India has undergone a prolonged lockdown. As a result, almost all the industrial units were closed. So there was a demand deficiency, and at the same time, steel production, the blast furnace cannot be kept idle. So there was the responsibility of the steel producers, particularly the BF producers, that to continue with the production in a limited scale, and that has made a lot of semi-finished steel available, because the demand for the finished steel was absolutely not there in the April, May, and June. So a lot of semi-finished steel were available, and the only way this can be disposed of was to find out the export outlet. And that is exactly what has been done in the initial period. And that makes Indian steel volume of exports looking so high. The apparent consumption in the first 8 months is 44.7 million. And if you add the January, February, March, we consumed about 23 million tons. So if you add that, it is already about 67, 68 million tons in the first, from January to October. So if the balance 2 months period, if you consider at the rate at which now it is going, because October we had a consumption, steel consumption, which is nearly 8% more than September consumption. That means demand is actually picking up, the pent-up demand or whatever you may say, and the new emerging demand. So that will take us about 85 million tons. That is my assessment. The scenario shapes up in the next few months' time. And this is the breakup of Indian steel, that large players which are following both the oxygen and EAF route. The total production in last year about 68 million tons. In the small medium category, there are oxygen route, there are EAF, and there is induction furnace route. This induction furnace route, if you see the chart, it is about 32 million tons of steel they have produced, and totally, while the large players have produced 68, these small medium players have produced about 41. So that makes the total of 109 million tons. So the induction furnace producers also have a big role to play in the growth of Indian steel industry and in meeting the domestic demand, because they are the very small players operating at very remote places. And you can say most of the rural demand or the the demand for the remote areas are served by this induction furnace route. Of course, there is a lot of quality issues are there because of the sponge iron inferior grade quality there, and not of non-coking coal, their quality of sulfur and phosphorus content is very high, and in order to restrain that, some of the people has installed lead furnace refining facility, but not. Now, one subject of the steel demand, because once you, if you know the market, you have to see that how this demand is generated. There are two approaches of how this demand is done. One is the top-down approach, where steel consumption is related to the GDP under a econometric relationship. It shows that for the last 2 decades, the steel consumption has an elasticity of 0.96. It was earlier more than 1. So that means steel intensity of demand is actually coming down in India. And that is a cause of concern for the Indian steel industry's growth. And unless the steel intensive designs and steel intensive structures are implemented in various areas of infra and even in the real estate, Indian steel demand will not grow. Now, the figure that has been shown here in the table is that taking the IMF growth figure of GDP growth of 8.8% and an elasticity figure of 0.96, we get a consumption figure of about 92 million tons next year. And assuming that the GDP growth stabilizes at 8%, which is somewhat optimistic, because a consistent growth of GDP at 8% for the next 10 years time is somewhat wishful thinking. But still, if we assume that, we get a total steel consumption about 180 million ton by 2030-31. Now, for the bottom-up approach, here is the actual play. You will find from this very interesting table that has been developed is that Indian steel, about 68%, please, I am repeating it, 68% of Indian steel goes for construction and infra. And what is the infra? Infrastructure means roads, railways, ports, civil aviation, that is airport, the irrigation, dams, and the transportation of water, oil, gas, where a lot of steel pipes are being used. So this we combine it as infra and construction. 68% of the Indian steel goes there. Then engineering, fabrication about 20%, automobile about 9%, and other packaging industry, including defense, is about 3%. So that is the broad breakup of steel flow in Indian economy. And if you see the fifth column, depending on the past growth rate, the fifth column has been revised. There are two scenarios, optimistic scenario and conservative scenario, based on the growth of each segment. And we have worked out the optimistic demand about 222 million, and the conservative demand about 179 million ton, which is more or less, the coming to the top-down approach of 180 million tons. And in this conservative estimate, we will have a growth of CAGR of 5.5%, and in the other area, we will have a growth of 7.5%. Now, coming to this very interesting topic of the sectoral breakup of steel consumption, this is the figure from World Steel Association. To see the China, and the first column is the construction, and in the last column is the last row is the other transport. The other transport is basically railways and shipping, which we have combined it in the construction sector, and that is why we have got 61% plus 7%, that 68%. For China, it is about 55 plus 4.7, about 59 to 60%. And the last column is showing the Turkey. I thought you will be interested to know, and this is all the figures are with you. Turkey is 33 plus 6, about 39% goes for the construction and infra. Whereas in the engineering goods sector, I think Turkey's consumption the steel consumption is very good. It is coming more than 33%. So whereas in India case, it is only about 16%. And the metal products, which is actually the intermediate product, we have about 7%. Automobile about 9%, same as Turkey almost. And so that is how these breakup of the steel consumption will give you an idea of actually the steel flow, and you can sort of link it with the sectoral growth which the country is facing in the coming few months' time. This is the short-term projection which Mr. Fujisawa also has shown up. I will not go into details of that. So I will just say that India's steel consumption, which has been projected as 20% lower compared to 2019, will grow up by 22% in 2021, keeping in view the V-shaped growth. In fact, a lot of things have to be, made into reality if this V-shaped growth has to become a reality. Now, steel demand trend, as all of you know, it is only China's strong recovery in China in 2020. It is actually mitigating the global demand contraction. So China is witnessing rising steel demand from strong property market and the government push for infra investment. My fellow panelist who will be speaking on China, he will further elaborate on this. So looking at the Eurozone, this is facing contraction due to severe impact. And however, the government stimulus in USA, it is leading to some recovery of demand. The steel prices are in India are actually rising because of the demand growth from auto and the rural sector. I'll come to the rural sector, and I can assure you will find it so much interesting that what is the rural areas demand actually talking of. The short-range outlook of WSA is, however, based on the assumption that there is no recurrence of COVID-19 pandemic and no prolonged lockdown. This is a very true, strong assumptions on which the demand projections have been made by World Steel. India has a national policy announced in 2017. By that, it has always been referred in various webinars that we are attending and also in various government forum that Indian steel industry has been projected to have a capacity creation of 300 million ton from the current 142 million ton. I think if you see the total financing that will be required in order to create so much capacity, it is it is just not possible for the Indian steel producers. So hopefully, like ArcelorMittal and Nippon Steel has already entered the Indian market by taking over the SR Steel, and a lot of glorious ventures they are contemplating. And similarly, POSCO at one time, they were also contemplating, and we are hopeful that if the Indian domestic market grows up, naturally there will be other avenues for these FDIs to come. Now, I'll slightly elaborate on the infra demand that is actually been based on the National Investment Pipeline, which is a document brought out by the Government of India in last year, which has identified 6,500 projects, which are also under implementation, going on board, and also conceptual stage, worth of rupees 11 lakh crore, or in dollar terms, it is 1492 billion in next 5 years, which is a very, very wishful thinking, and which contains about energy sector, roadways, urban infra, and railways. Total 71% of the total investment the government contemplates will flow in these four segments, where central government will provide about 39%. The state government, because as you know, India is a decentralized economy where state governments are equally having a major share in the developmental scheme. They will also have a 40% share of this total investment. And private sector, which is I would say it is the Achilles heel in Indian economy. It is almost stagnant for the last few years. Hopefully, the demand scenario will improve and private sector will come in a big way to invest in the infra sector. A major growth is the port modernization, which is about 108.5 billion has been earmarked. This port-led development, it has copied from South Korean market, and also the shipbuilding and automobile cluster is in line with South Korean cluster development. Steel tubular piles, steel superstructures, steel sheet piles, floating docks, onshore structures. These are the major area where this port-led modernization will consume. Already India has announced about 100 smart cities with an investment of 7.58 billion. And this will also develop under private-public partnership mode, that is the PPP mode. That means the risk of investment will be partially shared under a revenue sharing model by the government, and then the private entrepreneurs will come in under EPC contract, the engineering, procurement and contracts. Now, the second one is the defense. Now, as you know, India's defense sector has been importing to the extent of 60 to 65%, because all these goods, the defense equipments and all the specialized goods were not being produced because of the low growth of manufacturing. And this, with the recent emphasis on defense production and defense acquisition policy, the government has already identified 13 sets of weapon systems, including fighters, helicopters, warships, etc. So the capacity building in Indian manufacturer, where a lot of MSME sector, that means micro, small, and medium enterprises are there. they will be developing this. And as you
Mr.
know, the
Banerjee,
government...
if we can wrap up, we are 1 hour behind the schedule. I'm sorry for interrupting. Thank you very much for your understanding.
So why this defense sector? Because one submarine is requiring about 10,000 tons of steel plate, and light armored vehicle also requires 8 tons of steel. Railways is another major area where a lot of steel consumption and a lot of investment is already there. Dedicated freight corridor and the metro rail is coming up very fast. And the Indian steel producer, Steel Authority of India and JSPL are producing these, head hardened rails, and also the bullet train, where the speed of the railways will also be more than 150 or 200 kilometers. There is a road project which is connecting all the roads of India. This is called the Bharatmala, and investment. This is a 34,800 kilometer road development. Then comes the affordable housing, where government is actually pushing for housing for all program by 2022. The idea is to provide housing for all the teeming millions of people in India. And this is a good scope for steel-based, steel-intensive designs. And there is a huge scope if the steel-based designs are implemented in the 3-floor or 4-floor houses, and steel consumption in India will grow manifold. The civil aviation I have already touched. Auto is also another growing sector. However, the electric vehicle segment is coming up, and there are also a lot of pumping stations, the battery charging stations, which will require a lot of steel. And these are the crash barriers where a lot of steels are being used. These are the handrails, guardrails, road furniture. Now, in order to facilitate investment, the government has also come up with a various regulatory environment, particularly for the long-term investment in infrastructure projects. The real estate investment trusts and investment for infrastructure trusts have been created, and these are listed in the stock exchange so that FDI can also participate in that. I hopefully this will provide a long-term investment for the infrastructure sector. This I have already covered. And as a result, the Indian steel producers, because of the total market push, they are producing high tensile structural steel, fire resistant steel, coated galvanized sheet, parallel flange beams, cold form sections, hollow sections, and these are widely being used in the steel structure. You go to any of the modern airports in India, these are all based on tubular and hollow sections. This is how the low gauge, the light gauge steel frame is now very much in use in India. Hopefully, this will also. But then, Indian steel sector is suffering for want of good fabrication. Quality fabrication is must be developed, and we require a lot of skilled manpower to operate the new tools. Life cycle analysis is already being operated in most of the infra assets, but it has to be more so that the steel uses. Now, these are the uses in the rural development areas. I will not go through it. Mr. Murat is already sounding a caution, so that I will just see this. If you this presentation, it will be circulated. If you can kindly circulate this, the delegates will come to know that what are the areas where we are finding steel uses in the rural development. Rural development currently it is only 19 kg, and so there is a huge scope for the rural consumption to grow. These are the areas where now these are the steel trade. I thought I will go into details. I will not go into the details. These are the various categories where commodities are being imported. HR coil about 2.3 million, galvanized coil about nearly about 1 million. India is a good importer of melting scrap. It is 6.6 million tons we have imported last year. And these are the various, good quality, the special grade steel that has been imported. And hopefully this gives a challenge to the Indian steel producers also to improve their, quality aspect. These are the country-wise imports. You will find South Korea, China, and Japan. These are the main countries which have exported steel to India. And similarly, India has exported to Vietnam, Nepal, Italy, and UAE and other areas. In fact, the export destinations are much more is manifold compared to the import areas. And these are some price movement. I will not go to the detail of the why the prices are actually going up. These are the rebar prices of Turkey. I am told that today the rebar prices have gone up from 525 to 532. So prices are rising everywhere. Prices are rising. So that's a good thing for steel industry. So thank you very much for your patient hearing.